Good evening, afternoon, or morning. It's morning in my time. Uh, this is the gold chart, daily chart, and I'm going to review what happened this on Friday. Today is Saturday, and I'm going to review what happened on Friday because it was interesting, and it was interesting, and the whole week actually is interesting. But let's just get to business, no time to chart. So my initial draw on liquidity was somewhere around this area, which is, if you take a Fibonacci, let's just start by, this is the daily chart. This is a low, short-term low. Let's go to the week. Previous week low. Back to daily. This turtle soup. What does this make? These two down close candles. Once we trade above them, makes that an order block. And then these two down close candles traded to this order block. And then a close above the opening price. Does that make it order block? So because they're on the daily, I'm going to make them dashed. So we can see what happens when we go down to the lower time frames. So that's a propulsion block this way. So that's pretty much what happened. This is Monday. We we're in this candle's range, broke down the range of this daily candle, went to this low, failed to take out this low because we traded to the opening price of this order block. So like I said, as I was saying, my draw on liquidity was from this low to that high. It's obviously this next high. That's the next logical draw on liquidity. But for short-term basis, I use the standard deviation. See how when we finish trading down to this order block, we went up into minus 0.5 deviation. From this, you take your Fibonacci from this low to the next high. In this case, it's like short-term high. This is an intermediate term low, short-term high. But I'm not here to teach those things. I'm just here to review the market that I trade, which is gold only, as an ICT trader, because of the region I'm in and the amount of capital I can afford at this very moment, at this very period of time in my life. I trade gold. That's why. And I like the volatility. That's just it. So that was my draw on liquidity initially for last week. Hit that, found some resistance, not retail resistance, but yeah, found some resistance there, traded down to the order block, went to -1. So that was my draw on liquidity for last week, and we managed to hit that. I made a video on that, but I posted it on my Twitter. If you wanna follow me on Twitter, but it's just like, it's not anything special. My Twitter. There it is. Not anything special at all. Just regular guy that wants to make money, that wants to change his life for the better. So yeah, we meant to -1. So now I wanna focus on Friday's candle, Friday and Thursday. I just marked out this buy side inefficiency, buy side imbalance, sell side inefficiency right down, because I know we're gonna refer to it next week. And yeah, let me just read this real quick. I think we got the part of the story. You know what? Let me put back that fib, because I might have to use fib. So let's go to the hourly time frame. Like I said, this was my drawn liquidity. This high after trading to this order block, but this is my short-term draw. We hit the short-term draw. I expected us to blast through this, but we failed to do that. But it happened. We failed to do that. Why? If you go to the hourly, and then you do this, the old daily high. Take this high. See what happened right there? That's old buy side liquidity. If you go back to the daily, you see that that's an old daily high. Even though the liquidity was taken out there, you can treat this as a rejection bug, but I don't want to look at it that way for now. I don't want to look at it that way for now. But there's an old liquidity was there, resting above there. It got swept, but even though it got swept, there used to be liquidity there, so they should be a sensitive area for price. So top down, go to the 4-hour. Nothing very interesting. This is not QML. This is not SMC concepts. No, this is ICT concepts. I only trade ICT. That's what I trade. So there we go. Old daily high, marked down. Should stop referring to it 2 minutes. Let me just. So once we traded there, what happened? I'm a person that really likes trading order blocks, and this markings in my chart are just sessions. It's an indicator that shows sessions, what time, all that. It's not that significant. I mean, it is significant to my model. I built my model around it, but don't pay too much mind to it. That's why I made them so faint. So after we traded to that old daily high, we changed state in delivery on the hourly. When you are trading intraday where you're scalping, I'm a scalper, preferably. You have to, once a session starts, you have to look at your higher time frame. You have to base your setup around the hourly and the 4-hour chart. And then that's when you can go down to like the 50. So see how we found resistance, trade it back into the account. So ideally, I like this an order block to be traded to maximum 2 times, but they can always be reclaimed. So the interesting thing that I want to say was that I saw happen on Friday. I wasn't looking at my charts on Friday because I had a very shitty week. I didn't like this price move to the upside, all that. It wasn't clean for me. It wasn't in line. I mean, it was in line with my model, but I couldn't catch these moves because when prices like trending this, it's like continuously, it's one-sided. Sometimes, as a turtle soup trader, I'm a turtle soup trader. It's time. It's a hard time to like, personally. Let me just say personally, like maybe you'll be trying to like look for a reversal here, but no, you don't get the reversal there. Or when you want to catch the trend, let's say you missed the London session, then you want to catch a continuation move to the upside on the New York session, and London traded it to a PD array. You're gonna miss that because the continuation move for the entry, according to my model, you would have already missed it, and you're gonna become frustrated. So I'm still working on that part. All I know is that I'm very good at reversal trades, very very good. But I'm still working. I am just mediocre on. I'm very mediocre when it comes to continuation trades. That's why when gold is just buying, just one-sided or just selling, sometimes I don't even get involved in it because I don't really trust a lot of fair value gaps. And sometimes I mark a fair value gap that's too or too discount. Never trade to it. But those are just the things that I need to work on this year. I certainly know that I'll make it. I'll get to the point where I want to be. So anyway, back to this. I don't know why I said that. Yeah. So back to this 1 hour changes the delivery after trading to this high, and then we found sensitivity there. So let's go to the 50 time frame. When let's say you're trading the Asia session, obviously your next draw on liquidity will be this because will be this low. It's a New York session, New York AM low. So let's say you find an entry here. I like trading the 15-minute. I like looking for entry there or PD arrays. Then I can move down to the 3-minute, 5-minute, see if I get a change in state of the SMT, and then enter a trade. I like doing that. But if I see that price is on the 15, why do I have to go down to the 5 or to the 3? No, there's no reason. So here, I'm looking at all this and this price from here. From just there to the, ever since we traded to this part of it, I'm looking at that price. To me, it's not clean at all. In my opinion, in my humble opinion, according to my, it's not clean. So, what do? I stay away from the charts because I don't see what I want. If you try and force a trade, okay, maybe you can catch this trade. Inversion, catch this trade after trading to that order block. inversion, fair value gap, put your stop here, then place your TP here, or 50% of this. But the real draw on liquidity is here. You won't make much. Your risk to reward here, it won't be, you won't make much. You get here, and then, or maybe you're only here, and you never get to hit that target, sadly, because the price action London didn't trade into a relevant PDRA. That's why I use this session indicator, because I want to know what's exactly happening. Because I want to know what's exactly happening on my charts. So normally I'd look at this favor and then try and look for an entry, but we're finding so much sensitivity on the opening price. That's this line here. So that really shows me that we're very, very bearish. That's why we're finding so much sensitivity at the opening price. You don't need to trade to mean threshold. You don't need to trade to that fair value gap. So what does it become now? A breakaway gap. But it's okay for it to trade there. But I just don't want that. So what do I do? The morning session is very shitty. London didn't trade into any relevant PDRA, which is the London continuation. So this is the London 2 a.m. to 5 a.m. London session. So I'm just gonna sit on my hands. I don't know how far London is gonna go, but all I know is that it's not gonna take out this low. And even if it does take out this low, I'm not gonna beat myself up about it, because if I become frustrated, it's going to interrupt my trading journey, trading process, the process of making money from the market. From the market. So London close manipulation, got that on the sell side. Where after, if we get a London close manipulation, we have to target the next London. Ideally, I like taking. I don't share this with anyone. Like, gosh, I have a bit of. I haven't shared this with anyone. I do not ask people to follow my channel. This is just a channel that I use for a form of journaling. But every time London didn't trade into a relevant period, something happens from 550. Something happens. If we don't trade it to an order block after trade this in the 5 minute, I'll find a trade that's like that happened like that, and then I'll take it, and then I will share it in detail on my channel. But I mark out 540 if we do not have a change in state of the at 540, then I know that there will not be a reversal set up to the opposing liquidity on that. So 540, no order block that's formed. After that, I'll just close to that. I don't look at this. This is so anyway, that's beyond the scope of today's topic. But yeah, New York Open is pretty much a consolidation. Traded into the CB, didn't respect it enough for me. Like, the morning session was just shit. This is just choppy price, and New York is hardly choppy. Like, session is one of the best sessions to trade, and the price action is clean. London is like almost one of the volatile sessions to trade, but mostly shitty. sometimes. I don't know. I'm just looking at gold. That's the only challenge. I don't want to make this video long, so if you get a very shitty morning session, that's from like the price section wasn't. You look at the, you just sit on your hand. Let's say you got in a trade like here, like I said, the one that I was talking about, traded into that the hourly order block on Asia, and then you got in a trade here at the inversion, fair value gap, and then once it took out Asia, no, once we inverse this right here, you moved your stop to break even, because your next target is the next logical low hanging, or maybe like you take a partial here, and then I personally, it's hard for me to trade two contracts because of the money and I can afford to trade. So obviously I was going to enter here, and then like if I was to look for a trade for a setup here, I was gonna enter here and look to take profit here, but that didn't go up. That wasn't go up. Like let's say I entered here, and then after it inverted this, and then I stopped to break, and then price comes back, but goes to my stop. I was gonna become frustrated because I took a trade. I was in a reasonable amount of profits. I couldn't take a partial, and I got stopped out. I was gonna feel frustrated and maybe try and revenge trade and blow my account for no particular reason, just because I let my emotions get the best of me. That's not how it's supposed to be in trade. But sadly, we are all humans. We have to master ourselves. You have to understand yourself, master yourself as a trader, and you have to submit to your model. So in this case, according to my model and my experience, I have a year trade. According to my model and my experience, I wasn't going to touch the morning session. I just stood away from my charts on Friday because I had a very shitty week, and I have some stuff that I need to work on when it comes to continuation trades. And once I'm done with that, once that's settled, I know very well that I'm gonna be one of the best gold traders out there in my region. Of course, I don't want to dig size competition to the whole world. Yeah, might be seeing this from the country. Yeah, I don't. So that I just sit on my hands the morning session, and then I wait for the PM session that's from 12 o'clock. And then something interesting happened. Since the morning session was so shitty, the PM session should be forgiving. So this is our afternoon session from 12 o'clock to 3:30. 3:30. This is the ICT session. Yeah. This is from 11:30 to 1 o'clock. That's the NY lunch session. And then from 1:30 to 4 o'clock, that's your New York PM session. So just take this. So I wait for 12 o'clock. What happens at 12 o'clock? You trade up. Let me see if you took out this. I don't think. Let me see real quick if we took out that high. Yeah, you didn't take out the high, but that's not it's not significant for me. We trade up. Sorry for that. We trade up to the hourly order block. There we change the state of delivery is an order block. Is also an order block. We trade up there. What do? Displace aggressively down. And what do we get? The CB. And then you can enter off this CB because what? This is an institutional order flow entry drill. Institutional. I'm not gonna be teaching ICT concepts in my channel because no one can teach them better than him. He created them. But yeah, you treat this as this fair value gap, this CB, as an institutional order flow entry. You enter off it and target this low and this low. Those are relatively close. Even here, it's still too smooth. South side liquidity. So if it were me, if I was in the trade, if I took this trade, like I said, I was away from my charts, so I didn't see this. I just came back, and now I'm reviewing what happened because that's what you're supposed to do as a trader. That's your job. Enter here, target the sell side, and then the previous AM New York session sell side that we were targeting originally after this change in state of delivery. That's your low hanging fruits, like you'll never go wrong. Targeting the next draw. Session highs and lows, never go wrong. Like the closest session high, you'll never go wrong. And one other video I recommend to watch is ICT One Trade Setup for Life. Yeah, it's like one of the videos that like really boosted my trading experience. So like I said, morning session was shitty as hell. So much choppiness, no relevant. Wait for what the PM session will clear up the liquidity that was hanging on the table. Those who bought here left the stops here. So we're gonna target the sell stops for those that were making money. And here we went for that, took them out aggressively and went for that session, which is exactly what I would have personally, if I took the trade, I would have done. So now I think I'll just do a bit of review for next week. Wait, before I do that, I'm sure like when all of this is happening, you're probably asking yourself what's happening on the daily frame. And those are the things that you're supposed to be asking yourself, by the way, because the daily time frame is very significant. Like I said, this was my time that it just so happens to these are relatively highs. So that's a good draw on liquidity. So when all of that was happening on the daily time frame, we're just ranging on the previous days, and we're premium of that range. So what we do we look for shorts, so that we had that change delivery, and then institutional order flow entry still in premium. Southside liquidity. That's how you should approach the market. These things, they work on gold and they can also work on other things. These are just like fundamental rules of the algorithm that's there. every trade. So like I said, I mark this as the daily BC high, daily BC low. I'm expecting us to trade down there, take out the sell side, and maybe trade to one of these gaps. I'm expecting that. I'm not saying it's gonna happen. And if you can look closely, take this expansion leg here to here, and then do then look for OTE. See that this fair value gap is at the optimum trade entry for a short. We took out this sell side, we took out this sell side. We did not wick below it. You see how we're just doing that, failing to get a clean setup to the upside. We are not going to total that. We should continue lower. That's my prediction. That's just my. I'm not saying roll with it. I'm not giving a signal. No, I'm not here to give financial advice. I'm just here to journal my trade. Maybe share something that could help you on your journey. And I'm not here to look for people that can follow me. I'm not here to sell a mentorship. I'm not gonna do that, because if it's working, why are you selling? If it's so good, then why do you have to sell it? So this was previously used as a breakout gap, expecting, since we traded to our draw on liquidity, I'm expecting to send us lower. Plus we have the high York PM session, expecting that to be total souped, and trade lower to this low, trade here, work around it. If we're really bullish, then trade to trade to this fair value gap, this fair value gap, but that's just work on the upper hand. And then that's when we can move high. That's what I'm thinking. So higher to that. That's what I'm thinking. And by the way, these days, I don't know if you guys noticed, but NFP, CPI, they're just shitty. I don't know. In gold they are. I don't know in other forex pairs. I think that they might be good, but like you can't find a clean setup after NFP hits. Just I don't know, man. I don't know. That's why it's not good for you to like try and find a trade. You just end up blowing your accounts because you won't find it. Sometimes you can just find one good trade for that day, or even two. That's why I only take 2 trades per day on my trading plan. But I'm not here to talk about that. I think that's just it. I'm done. I mean, it was morning, so I just finished eating breakfast, and I was like, maybe I should let me just make this video for YouTube. So yeah, that was it. Stay safe, and more videos to come. Yeah. Stay safe, safe trading, good luck, everything. I hope your family's well. I hope you reach your dreams, work hard towards reaching them. And trust the process. Just show up every day, and you'll get what's meant for you. But you saw. Uh, till next time.